Hello and welcome to Moneylife. This is Sucheta Dalal. This week, I'm going to talk about an interesting story. You know that we've had a furious bull market for the last 3 years. But even before that, this video blog has been reporting about how people are losing money all the time when there are broker defaults. People go in for dubious portfolio management schemes, think that their broker is going to invest for them, and lakhs of people have lost money in the last 5 to 6 years. Even today, when you open the paper, every other day, you're hearing about some techie, some senior citizen who's fallen for some scheme and has lost huge chunks of his or her life savings. Some of them have lost in crores. Okay. So what happens when you are a victim of this kind of dubious investment advisor or fund? What is your chance of getting redress, getting your money back? We're going to look at one case this time, which has been fairly successful, but raises a lot of questions about what really happens. So we are living now in an era where influencers are hawking investment advice, snake venom, they're party people, they can hawk anything from food to movies and stocks as well. People fall for it. They listen to what they're saying. Then there are these dubious WhatsApp and Telegram groups. And this, believe it or not, has been happening for a long time, from around 2010, 11, maybe 15. It's nothing new. Now, the Securities and Exchange Board of India, which is a market regulator, has very stringent rules for those who are its official registered investment advisors, portfolio managers, KYC rules, there are compliance rules. They have to give a lot of detailed documentation. So shouldn't it be our expectation that when you finally invest with someone who's registered, a registered stockbroker, registered investment advisor, you expect SEBI, which wants all these compliances, to keep a stringent hawk-like eye on them, don't you? Well, believe it or not, that would be a wrong assumption. And this legal battle that I'm talking about by victims of a company called Highbrow, okay, Market Research Investment Advisors Private Limited, will tell you why. The case goes back to well below 2015. In fact, before this explosive stock market happened. The company is run by a set of qualified promoters. One of them is from IIM. They had all their SEBI mandated certifications and ISM and what have you in place, but was actually running not an investment advisory with the documentation, but really a kind of Ponzi or PMS scheme disguised as an advisory, promising very high guaranteed returns and, of course, charging hefty service fees. Now, complaints about Highbrow, I'm going to call it Highbrow now, complaints about Highbrow began in 2015. There were investors who felt cheated, wrote to SEBI, which has an online portal called Scores, and wrote to various SEBI regional offices going back to 2015. A writ petition that's filed in the Bombay High Court says that the market regulator really took things seriously only after 2019, when complaints began to get into hundreds. With no prospect of reclaiming their money, SEBI, of course, like I said, 2019 began to do things. So there was an interim order when things went to the Securities Appellate Tribunal. There was another confirmatory order. So 2019, there was an order. 2020, there was an order by none other than Madhvi Puri Butch, who is now the SEBI chairperson. And there was a more detailed order in September 2023, which has been reported by Moneylife. Like I said, this happened when the complaints now were in hundreds and the money lost was over 72 crores. At least that's what SEBI's order says in one of the show cause notices. In fact, even victims had no idea that people had been cheated across this country. The scale and extent of this fraud became apparent even to those who have been cheated when they were sitting at home during the COVID lockdown and created a WhatsApp group, began to exchange notes. More people joined and they realized that this is a nationwide issue. So since WhatsApp helps you to create groups and chat, some of them got together and filed a petition in the Bombay High Court in 2022. What did they want? They wanted an investigation by the Central Bureau of Investigation and directions to SEBI to look at this more closely. It's embarrassing. that you have to go to the High Court to get the market regulator to look at things. Why did they want a CBI investigation? Obviously, because they didn't think SEBI is going to do the whole job. And they said that there are 29 first information reports. So people file on scores, nothing happens. So they go and file a criminal complaint with the police. So 29 first information reports have been filed across the country in different states. Some have been subsequently quashed. And SEBI has received 281 unique complaints online. I'm saying 281 unique because it was at one time well over 500. So the petition says that the local police in all these places are ill-equipped to handle the scale and complexity of the scam. Most often, they don't even understand how the market works today, what are SEBI regulations. The High Court-led petition had an impact because in Jan itself, notices were issued to SEBI and to CBI. CBI agreed to investigate Highbrow. But SEBI's initial stance was that we have done what we can, which was those 2 show cause notices, confirmatory order, and a 2023 order barring directors from participating. But I'll come to that later. A big breakthrough actually has happened 5 days ago. On 20th June, a bench of Justices Revati Mohite Dere and Shamsi Chandak have recorded a positive change in SEBI and CBI stance. The regulator has come back and told the court that we have now gone to our board, we've got permission to launch prosecution against the company and its directors within 8 weeks. CBI now, according to the 20th June order, says our investigation is still in progress and witness statements are being recorded. So 2 things are happening now. SEBI is going to file prosecution, further prosecution within 8 weeks. CBI says we're still examining witnesses, so they also have to file a prosecution. Now, what is this case about that has CBI and SEBI on its tail? First, a bit about the company. Highbrow was incorporated in Madhya Pradesh. It has promoters with the names of Swapnil Prajapati, Hemant Agarwal, Mohit Chaprawal, and Lakshmikant Sharma. It was a pretty big operation in the beginning. 250 business development executives used to make calls to people. It had a website which is now defunct called ways2capital.com. There's a famous one called Ways to Wealth. These are Ways to Capital with the 2, as we're showing you here. They said they're offering research-based stock tips and investment advice with a fat service fee. So it's not really a PMS, but do what they say, it's investment advice. According to the petition filed by victims, Highbrow's modus operandi was keep making cold calls to investors, offering investment packages with a service fee and, like I said, high guaranteed return. You make any number of calls, hundreds of them, doesn't matter if you're under a do not disturb, but some of them fall for it, you manage to get customers. Victims perhaps thought all they had to do is follow the advice, it's like a PMS, because there were no documented processes for selecting investments as is required by SEBI. The sole purpose, according to the victims, was to extract a service fee. SEBI's order also says that this was hefty. It often exceeded the proposed investment amount. I don't know how this happens and how people pay it, but we read and we learn. And this was used to mislead investors by just the promise that you will earn extraordinary returns. Now, like I said, from 2015, complaints started. Between 2016 and 2019, actually in 2019, SEBI issued a cease and desist order against Highbrow. At that time, the company seems to have been in a defiant mood. It contested the SEBI order, went to the Securities Appellate Tribunal. Meanwhile, people were lodging police complaints and FIRs. In one case, the company itself, which is actually cheating people, went to the Bombay High Court with a criminal writ petition. In one case, they settled with someone and wanted to withdraw. So all this has been going on from 2019. One petition was withdrawn in 2022 after the petitioners just failed to appear in court. SEBI, meanwhile, continued its investigation. In May 2019, it prohibited directors and employers of Highbrow from trading in securities. They asked for an inventory of assets. They were barred from disposing assets, and some accounts and over ₹1 crore was frozen. I'm going to come to that. Depositories were also asked to ensure that no debits were made from the demat account of Highbrow. Until this time, like I said, the company was settling complaints, paying some of them. In fact, there's one case where the Bombay High Court, while allowing Highbrow promoters to withdraw a petition, fined them 10,000 rupees, which had to be paid to the Children's Aid Society in Mumbai for misusing police resources to settle private disputes. Look at the brazenness of this company and its promoters. Like Jan 2020, there was an order. I said Ms. Puri Butch, confirming punitive action against the company. In July 2022, SEBI issued another show cause notice to Highbrow directors, asking why they should not be ordered to refund 72 crores. So this is now the number that we have, 72 crores. And this final order was in September 2023. Advocate More tells me that 10 to 15 FIRs were filed across the country. The petition, in fact, has detailed all the efforts by investors in various police stations. The Cyberabad police has been particularly active. They have traced the background and identities of the promoters. They even arrested one of them, Swapnil Prajapati. And according to the lawyer, he is absconding after being released on bail. This is a serious offense if it is proved in court. Now it's September 2023, SEBI issues an order. What does the order say? Registration of Highbrow has been suspended for 1 year. Going on from 2015, you're suspending the registration and the directors for 1 year, banning the firm from the market for this period for violations of investment advisory regulations. It is not even a slap on the wrist. No wonder the victims went to the High Court for a better outcome. In fact, SEBI's order has only done one positive thing, which is to confirm many of the allegations made by the victims, which is fraudulent and manipulative actions, unreasonable fees, maximizing its own revenue at the cost of clients, selling unsuitable investment packages to customers, and of course, not resolving customer complaints. It lists 93 of them on SEBI's online portal. This is of little use to victims. They want one thing, which is to get their money back. So now what's the end game? Victims have something to be hopeful about from the 20th June order. It's been posted for hearing again on 20th. What is expected to happen meanwhile? Hopefully, CBI will conclude its investigation and file prosecution. Hopefully, SEBI will also comply with what it has committed to court, that in these intervening 8 weeks, it will file fresh prosecution. The idea of that prosecution should be to get investors' money back. The rest of it is irrelevant. That is the only question if you're a victim. Will I get any of my money back? So petitioners have looked at this as well, because these cases can drag on. They have said that SEBI froze 1.32 crore when they took their 2019 and 20 orders. So if that money has been impounded, at least on a pro rata basis, it should be returned. Then remember, all the unclaimed money from mutual funds and elsewhere goes into what is called an investor protection fund. All that happens from the investor protection fund is ads, and SEBI really does not need to issue ads because it is making every registered, regulated intermediary issue ads. You see n number of ads from depositories, from exchanges, from even peer advisories and brokers, okay, on how to be careful. So SEBI doesn't need to do that. What does it do with its funds? These victims are saying, give us money from there, because SEBI failed to act in time. SEBI failed to initiate strong enough action and check what Highbrow and others like it was doing. That happens, it'll be quite path-breaking. Hopefully, the Bombay High Court will look into it and issue something. It's hard to say. For the moment, real victory is far away because, like I said, the CBI prosecution has to be concluded. SEBI's new prosecution has to be concluded. Maybe the Bombay High Court will look at the plea about money and say something about the investor protection fund, but that will come at the end of whatever these two prosecutions are, and we don't know where they'll be filed and how long it will go. So it makes you wonder whether victims of financial fraud should take comfort from interim successes and whether meaningful justice will remain expensive and elusive. Every time I see investors getting together and at least putting up a fight, it raises hope. for others. Because the story so far, with over 30 years of having a formal regulator in place, is that people do not get their money back. There are one or two episodes which are so trivial that they're not even worth being counted. So if this succeeds, if the High Court says, give money from the Investor Protection Fund, what are you doing with it? If some money comes back to them, because remember, this is a case where it's a SEBI registered investment advisory, then there is some hope for investors when they file a complaint. So watch this story. It may seem small, highbrow may be something that you've never heard about, but the case may be relevant if it leads to a precedent. If you agree with what I say, let's try and build up some pressure so that there is at least one success. And if you like what we are saying, subscribe to this channel. Thank you.